Well, good afternoon, everyone. Scott Henderson, Shooter. And of course, at the end of today's presentation, please do review our disclosure. All right, let's jump right into this. We have a couple things that I'd like to address today. All right, let's start off. Let's just talk about what's going on with Iran. There's a very, and I've obviously running models, I have little more than a 48% chance that we end up in a Vietnam type war. And that's challenged because the equities really did not do well during that period. So, in hindsight, I'm looking at the market where, hey, we have a number of headwinds that are coming in. Bank of Japan constantly are calling multiple days now for funds to head back into the yen, into Japanese denominated assets, right? And I think that's a warning at this point, because if you know anything about the Japanese societies, they never ask for help. Now, on top of that, we also have this other quagmire going on with the data center builds. New York has banned new data centers for a year. It's a possibility that Texas does. There's a possibility that Alabama does. There's a possibility that Florida does. There's a possibility that Georgia does, etc. I think it's a total of 7 states now have, at least there have been political statements regarding a temporary ban on new data center builds, including existing ones, unless they're generating their own power because of the hit to society. And honestly, that collective today, and the fact that we ran into resistance, the fact the dollar is pushing, right? The fact that TLT is pushing towards the lows. I'm seeing a lot of imbalances here that make me very concerned about whether or not we hold up here. So in other words, we now have this collective of events that are really creating a decent storm as a headwind versus if we didn't have that. But let me jump right over to the SPY and sort of key off there. Clearly, we got at least this minimum ABC, which should take us back to about 714. An extended number is 701. An elongated number is 682. Now, the next challenge part, I'm going to introduce a new pattern here. This is one of an impulse wave, which quite often happens. So you end up with wave 3, which is typically about 2x the size of wave 1. However, sometimes it can extend to 3x. And what basically happens is wave 1 is pretty much equal to wave 5. However, very often are they this shallow. Quite often they end up being these really aggressive flushes, and you get this kind of a look. And where does that happen to come back to about 612 support in the SPY? So I've added that to my mix, which usually at this stage I don't add. I'm excluded. I'm like saying, okay, it's not an equal ABC. Okay, it's not an extended AB. Okay, it's not an elongated ABC. It's very unusual that I add something to the mix because I see something a little different. We've clearly rejected price. We couldn't take out the highs. We're continually batting our head. This whole step here through the last 2 weeks, we're back and forth. Bears are in control, bulls are in control, etc. And that hasn't changed. So now we don't have the dip buyers. We have the bears taking over equal to what the bulls are buying. So, and that on top of that, the options market, with the exception of earnings plays and with Google and Tesla, that's just going to be extremely heavy on these markets. All we need is a few more names to report negative, and this entire earnings season could take a dump pretty quick. So that's my thought. Let's jump over to the NASDAQ. Now, similar look, except for I think ultimately we're going to put in this 665 regardless. I think it's inevitable. And the reason is if you look at the MAG 7 to the right of my screen, they're just getting pummeled. And an extended ABC would be down at 645. Elongated would be here. And then it has that same pattern that I just outlined in the SPY. But if we get this typical elongated version of that, right, where one equals 5, etc., you end up with a fairly deep flush back to the shelf, same scenario, back around 540. So all of that collective, is why I cut and ran. I was not, I was seeing, I get some gains and then it'd take a few names and then I'd give it back. Get some gains and then I'd give it back. And really, I've been in that, I don't know what you want to call it, that spinning wheel, the hamster wheel, for well over 60 days. And I'm looking at it and I'm like, okay, my monthly stop percentage was hit, which is 20% of my prior month's gains. And I was like, no, I'm not really excited about holding here. I'm done. I pulled the trigger and cut. And that really is with the collective of everything that I'm looking. Reason is there's no reason for me to give back the gains that I had in the first quarter, trying to hold on into what typically, obviously, when June is weak, often 80+% of the times, July is strong. Well, we haven't gotten that. All right. So I'm putting that on the sideline. So now I'm going back to the typical scenario. Outside of that, when we don't have that dynamic coming into July and August are weak, and typically we end up down between 5 and 7% over that period of time. So that was also weighing on my thought. All right, let me jump over to SMH, and I'm seeing this as a potentially an impulse, an ending diagonal, which would bring us back down to 507. I get a little interested, but be very candid. Until we take out this 426, until that data center problem about these bans, whether it be New York or California or Texas, the bottom line is we don't need a disruption in this capex because that's what our bull market has been based on. That's everything. This entire push here has been based on AI development and growth and the capex going in. Well, what happens if that stalls? Wow, look at where we are. I mean, if it stalls, the reality is we could be back to this shelf at 283 and semis pretty doggone quick, especially if those orders start evaporating. So that's kind of my thought. Let's take a look at Bitcoin. Nothing's changed. Even when we break above this until we take out this ledge at 73, I still think we're destined with 50K. That's my thought. Similar look with IBIT. It actually looks a little better. Sometimes ETFs lead. In this case, it is. So we have a clear divergent buy box here, right? However, I think we get one more low, which is structurally, it just doesn't look. We're skirting the mean, which typically means you're going to break down lower. So in other words, this was the bounce or dead cat bounce, which really we didn't get. It's not euphoric like this. This is more of a dead cat bounce like this here. And we're not getting that here. We have a similar number of candles and we have substantially fewer buyers. And there also is some concern about what's going on with stablecoin and what's going on with the different bills in Congress now, or the House, or wherever that is, and how that's going to affect the markets. So there's a lot of indecision there as well. So I don't see that change. All right, let's jump over and look at some requests from some of our names. Okay, the only name I have on in Swing Trade Node is Hive because I do believe it gets bought. I think a majority of everything in crypto miners either becomes a dual purpose facility for AI, especially the data center problem just raises that. What are all these builders who were building, I don't know, what was it, 18 to 25 gigawatts was being built in New York? Well, where are they going? What are they going to do? Well, they're going to look for existing conversions, and miners are a great thing. So we saw that pop in Cypher when they did the conversion, or Cypher, and I just picked Hive. I like the upside for it, for pushing. I like the risk reward back to $10, and that's why I'm there. Right now, it's just not conducive to add longs here. I'm just, I'd rather sit on the sidelines and not give back the gains that I spent a hell of a lot of time getting for the quarter. All right, let's look at some names, some requests here. All right, so semis, again, are weak. I have a pullback to maybe $15 in AMSC, and I don't see a reason that's going to change. All right, TLN, let me just look at that. Yeah, you could buy it here. Market weakness doesn't excite me. It gets back below this 360. I would reconsider any longs because then this may be an ABC. This is our A, this is our B, and then we get a C down here. So you want to think about that. So this continues to break down. Bear flag there as well. Just keep that in mind if you're holding a position on it. MACD does look to me like it's waning. RSI is right at 50%. So there's no bullish thesis here. All right, looking at T1 Energy, you would think it would be doing better with what's going on in Iran, but it's breaking down as well. And part of this, I think, is that chemical issue we have coming out of the Straits. Everything is being disrupted again. We really haven't seen that wash into price. So, I mean, unless the energy core has a solid build-out contract that would be exclusive of the potential bans on data centers, right, then I think they're at risk of pulling back. So any gains that they receive from these are going to be names that pull back, but they also are going to give us some buying opportunities. So my thought here is we get a minimum pullback to about 507. Then I get a little interest maybe taking a shot, but probably I'll pick another name. Simply, I would rather go into coin or hood or something in crypto that is, because obviously with what's going on in Washington regarding crypto and stable coins and et cetera, and the fact that the banks are going to be able to trade them. You're going to have an increased trading volume. Well, who are they going to use? Well, Bank of America is not going to create their own trading house. And it's likely that they strike a deal with somebody. They may already have one that I'm not aware of or thinking about, but that's going to be across the board with all the banks. So who's going to benefit? The existing exchanges in crypto, and there's a limited number of those so that we can pick from. So that's my thought there. TE, I think we had a little bit lower, around 5, I think is the number we want to look for. Looking at Poet or Pote, however you pronounce it. We're getting a little bit of a push, nice right at the shelf. It hasn't taken out. I would rather have it held up here at 824, but it didn't. That would have been structurally strong. I'm going to classify that as weakness. It's weak below this simply because it didn't hold the body of that candle. So that's my thought. Until it gets back up there, I wouldn't be interested in carrying longs. If I'm holding, even here, I might be selling some covered calls to try and insulate a little bit. But that's my thought. Looking at Galaxy, it's actually getting a little bit of a bid. Good spot. It's going to get rejected up here around $36. But actually, I like the name here. We're getting a little bit of follow through into that candle. However, we did wick off. So you want to be conscious of that. We closed 50% of that prior candle at 22.96 roughly. I would take it off if I was holding that. Gets, my opinion is it's weak below this. So that little line right down there does express some additional weakness. And we're not below that at this point. So roughly 23.30. All right, looking at Meta. Again, the Mag 7 is just really weak here. We have a clear downtrend. We've held this resistance, right? Until it gets back above that and clears it and it becomes support. The bias is that we're going to build out this broadening formation that is kind of formed here. And let me just copy this and steal it for a second. So, we have this broadening kind of formation here. I'm going to come in and change that. See where I like that better. It lines up a little better. Body of those candles are right there. So, my bias is that we pull back towards the lows and at least test the shelf. Flushing drive 1, flushing drive 2, maybe a flushing drive 3. Clearly we have not been able to take out these highs here. So you have really solid resistance here. We're into that second candle. So, RSI gets back down to about 36, maybe. That would be where I might like it. It has not broken the wave structure that I drafted. We overshot a little bit. I was looking for about 596. So it has not failed the structure that I visualized. And realize I mapped this out on multiple time frames. And just going out to the monthly on this chart for a second, just giving you a visual of what I see as far as the upside. This is a huge structure. This is a cycle wave 1, and we're in cycle wave 3. Now, it's unusual we break down at this level from this. This is a lot of noise, right? And the challenging part is this, I might be wrong. That might not be an impulse wave. This whole thing could be a head and shoulder. This is our left shoulder. This is our head, right? And we're going to come in and put in a right shoulder and then fail down here. Now, it can do it as slope. Typically it's going to hang into the slope of wave 1 if it does that, so it would look something like that. But that ultimately, be conscious, if it breaks below the body of this prior candle here, and I'm going to put this line right here and go back to the weekly. So we break below this 549, this is viable. It's actually a pretty decent short at that level. All right, let's look at A-Lab. Getting a little bit of a bounce. Nice pullback. Actually, it's one of the names I like here if I was going to add something. We held the shelf. Notice the shelf right here is very important. Right there. We wicked right to it. Notice how close to 306.88. Actually, just for shoots and giggles, I want to look at that price. So at 307, 306.88. So it did not breach the body of that candle. Pretty solid as far as I'm concerned. All right, let's look at NEXT. Getting a little bit of a bid. Actually, I like this to the upside. Better at 659, right? Only because this looks like an ABC structure. And we're wicking off on these tops. Okay, so let me just drop that in there to get a visual of that. So, this is our A, B, and our C here. So this would be our B, and we potentially could get a C right back down here, which would be a little lower than what I have measured as far as our 2. come to the bottom of that shelf, which happens to be right where we had some resistance in the prior leg. And our highest one is here. So this gets extremely weak to me below this. And I didn't look at that distance. Let's look at AMTX. Go back to the weekly. Actually getting a little bit of a bid here, up over $1.75. And it's a good spot for it to bounce. I think, if it is going to hold, it'll get back to about 378 and reject. The problem is it likes to do those full retraces on those pops. So if it gets up there, the MO is clear on this stock. You get that wick up there like that, what do? You sell it. Back. So that's my take. Is getting a little bit of a bid. RSI is turning up with a little bit of divergence here on this candle. Just to confirm my line there. You see. And yes, we had a confirmed low prior to that before that candle came in. The wick is divergent. So that's a positive push back to the upside. All right, looking at GDX. Now, immediately what I want to do is I want to look at gold. I want to go over to commodities, futures, and look at GC. And part of it gives me a better read. Now, I want to clarify, GDX does not follow spot as accurately as GLD, all right, which is why I usually recommend going into GLD. GDX is a better company sometimes, and there's more gains to the upside because, obviously, you have the miners involved. But as far as spot, GLD is a better play if you're playing on gold. Now, I actually like gold here. Problem is we've already wicked off. We got a little bit of a bid on the Iran situation. It's waning. I'm looking at this as a leading diagonal. So this is our 4. Until we take out this high at 42382, this is our destiny, this shelf range. Now that might hold right there. Could very well hold. But it's a perfect spot for it to hold. We wick down. We flush into it, and then we wick back up at 366. And that's a good spot to enter longs if you want to at that point. RSI is wide open, is still confirming MACD is wide open. Let me jump back to GDX. Same scenario. It looks exactly the same. RSI is still confirming MACD is wide open. And again, another leading diagonal, a little different structure, not as much breadth there. However, this is a much more bullish candle than we saw on gold future as far as that looks. So let's jump over to FLG. I think we get up to this 1690. Now I've anchored in confirming trend support here, which roughly is at 502 and 1370. That breaks, I would be trimming, because as long as this trend, it is your friend until it breaks. And when it breaks, then you trim. All right, because the most likely outcome is we're going to come back and test this shelf around $12. And obviously, if you're holding from $8 or $10 or $12, you don't want to get back into the red there. So if it starts to break down, it could potentially, do something like that. Not only that, you have this ascending wedge, which, those of you who know what ascending wedges do, ultimately what this means right here is you have these two lines that come in, and the most likely outcome is that it breaks down. Now, it's not as solid of a descending sort of, it's a little broader, but if you draw this last leg, like a right here. So, it's getting very tight on that last leg if you're measuring that last piece. So that's my 2 cents on that. All right, let's look at Barrick, excuse me. I think we head back to this 32. I think that's a good spot to get in there. It's right at the shelf. We've already body closed below that, right? So it is a little bit weaker. So, the next shelf, if you want to give it some room, 3129, that breaks, I would not hold below. So that number, let me just clarify that right at the body. It closes below that 3136. Then I'd be trimming. Again, RSI was confirming on this low, right? MACD is rolling up a little better on this. So it is out of the 3 gold chart, right? Barrick looks better, all right? Let's look at Big Sky. Getting a little bit of a bid down here. Now, right here, breaks below this 1867. You have to rethink the trade because then we might not bounce. Space is weak, and I think a lot of it has to do with the question on whether we're going to be able to fund this in the timeline. Are we really going to get everything else up in space in the next 24 to 36 months, or are we looking at 7 to 10 years? I think that's the question the market's looking at, all right? And that timeline is something I don't know that anybody else does either. The assumption we might be there, but let me drill down a little bit. I want to go back to the daily on this one, just so you get a visual of the thought pattern. So, to me, this is more of an ending diagram. And the question is, that could be our one. right? And and this could be a failed breakout. This be an ABC, and this is whole structure could break down a little bit lower, which is very challenging, right? From this low. I mean, if this is our ABC structure, we're way the heck. It's an $8 stock. However, it is a pretty decent three drive. So you got drive 1, drive 2, drive 3. If you measure from your peak, it could push all the way up to 52. One of the few patterns that reverts 100%. So all the conditions are there. We have our divergent or confirming low, we have our divergent low. We have two of them actually here, and here as far as flushing drives. So technically you have flushing drive 1, flushing drive 2, flushing drive 3. It's a perfect picture kind of thing, actually. However, I don't know if the sector has a strength. When I go look at the sector, it was one of the weakest sectors that I've been looking at outside of the pop from SpaceX IPO. That was basically it, and we died after. So let's look at EWY, and actually it's getting a bid, holding a bid. I think potentially we could get up and out of here. The main concern is that we run into a little resistance right here at the shelf. It's a little noisy on the daily. I want to come out to the weekly on this one. And you have all that. Whenever you have a stock that gaps like that, to me, my first thought is it's thin, right? I don't like thin share. I don't like thin ETF, right? And the reason is because there's not a lot of liquidity to get back out. So what I've done is I've drawn this line, basically I'm looking at that as my, peaking drive 1, peaking drive 2, peaking drive 3. So it's created a trend line. So once it breaks back above that line, roughly about 59, what is it? It'll be about 57.27. Then it's probably worth a shot, because then this becomes a potential impulse all the way back up. And, we have a huge boom in South Korea, which we could, so this would be our 1, our 2, and we get a 3, 4, and a 5 up here, something like that, if that becomes an impulse wave. So it is a good spot, to consider putting a piece on. I would prefer cash secured puts here, and I would sell right at the center of this shelf, right where the body of that candle is, right there, about 155 roughly, which probably doesn't pay that well, but that's what I would look at as far as that's concerned. You could always also do leaps, right, at the money or out of the money, or you could even go up to 195 if you wanted to. I'd be very cautious with the size that I would do there, but EWY does look pretty decent there. Now Loon, perfect spot right at the ledge. However, I'm going to come back and say this. If this break, that whole bullish scenario is broken, I mean, it does get substantially weaker below this line right here. So roughly that 625. Equality is back around 476. And to be honest with you, if this breaks, we're probably going here, probably going down to test this shelf, which would be a better spot to bounce. That means this entire structure is broken. Okay, this the most likely pattern here would be a head and shoulders, which you all know that I don't really like head and shoulders. I don't like to trade head and shoulders. I see a head and shoulders. I don't like it. Reason being is, what does it do? It can revert all the way back down here to a butt, right? So if this is our left shoulder, this is our head, this is our right shoulder, I don't like the look. My 2 cents. But it's your capital. You can choose your risk. RSI is kind of confirming here. MACD is still wide open. So, I would look for a push, and this is challenging because RSI, if we look at our slope, there really is not a slope here because it broke out above here. So, you'd have to come in and do a slope. Yeah, maybe you could come down here and say, hey, it breaks above this. It's really not structurally symmetrical. Usually I like to use my peaks, not the lower shelf, but that to me would be kind of where your support was. So a break above 46.96, maybe that might be a reason to add. Or if we get back above that 684, that might be a reason to add and chase that bot. All right, looking at GEV. I think this, I still think we have a Washington investment in GE to resolve the AI infrastructure power problem. I don't see how we don't go there, all right? The reason is this is the fastest route to power these new data centers. And we have plenty of places in America where we have natural gas. The challenging part is that on Washington's priority list? And I don't. So right now, this to me looks like a leading diagonal to the downside, and ABC would be equal down to about 917. However, if I'm correct on that leading diagonal, we're looking at a pushback to about 790, which is why I don't own it. Right? Once we reject it here, right, the thesis for the breakout, on top of that, we got this wick here, and we wick just above there. So it is a stop run. not a question whether it was a stop run. So they ran this on the FOMO, right? And then they pulled their orders and they left everybody holding the bag for their liquidity. All right, that's pretty much what I've got today, folks. Great trading. Until next time.